You predicted we could see unemployment as high as 30% in the second quarter, and you called for a massive stimulus program. We got a massive stimulus program, so does that change your forecast for unemployment and growth?
Yeah, thanks for having me this morning. I did want to see pandemic relief. I wouldn't call it stimulus. I would call it pandemic relief. What I interpret the program as trying to do is stabilize incomes and stabilize businesses as we work our way through this investment in our national health over the next couple of months here. On the unemployment, we do have a blog on this. If you read the blog carefully, you'll see that there is a way to bound the unemployment rate. It's going to be somewhere between 10% and I think the upper bound is like 42%. But that's because we're just identifying vulnerable workers in this environment. And what's going to happen is that those workers, some of those workers are going to have to seek relief so that they can pay their bills through this period. So we're expecting the unemployment rate to spike, but let's call that pandemic relief. Then they can pay their bills, and once the virus goes away, then we'll be able to return to normal. So hopefully, if this all works smoothly, and there's a lot in the legislation as well, we'll be able to come out on the other side and get the economy rocking again.
Well, Wednesday is April 1st. Mortgage payments are due, rent payments are due, utility bills are due. Could we have a problem if people can't pay their bills on Wednesday?
My sense is, of course, we're in a crisis situation, but my sense is that everyone really understands what's going on here now because obviously it's been the topic number one, not just in the U.S., but around the world. So I think people pretty much understand that the relief is supposed to enable people to pay their bills as best they can. There might be some delays and things. You'd expect that in a crisis situation, but by and large, I think there are plenty of resources in this fiscal package to handle what we're going to go through here.
Well, the Main Street lending program that you guys have announced is in the package. How's that going to work, and when does that start?
That's in the design phase right now. So I think from a firm's point of view, there are two ways to handle the crisis. One would be the traditional way, which would be to shut down temporarily and send the workers over to the pandemic relief or unemployment line. And a lot of that is going to occur. That's already occurred. We saw with the claims number last week. And that's okay. You're getting, and the unemployment insurance benefit is beefed up. So they're going to get closer to 100% or maybe 100% of what they would have gotten had they just continued to work. So I think that part, that's one way to go. But if the firm goes in that direction, they might lose connection with their workers. So another direction to go is to go to the Small Business Administration, get a loan, which is ultimately forgivable if you meet certain conditions, mainly that you keep your payroll more or less intact. So if you go that route as a firm, then you might be able to retain all your workers, and then when the startup occurs later, you'll be able to have the same workers, and you don't have to go hire all over again and get your business ramped up again. So that might be a better way to go for many companies. If companies decide to go that way, then we'll see lower unemployment and more uptake on the SBA loan side.
Your district has a lower incidence of infection rate at this point. So what's happening in your district? I normally ask you what the CEOs are telling you, but I also want to know what mom and pop are telling you from the mom and pop stores.
Yeah, we do have a lower rate of infection, but boy, it's pretty quiet. Where I live here in the St. Louis metro area, most things are shut down. People stay at home. So that makes me think, and just reading about it across the country, that the idea that there's a lot of regional variation here is probably not the right way to think about this. I think pretty much everywhere has bought into the idea that you should be very careful about going out and very careful about spreading this virus. Also, I think another thing to keep in mind, this is not just things that are ordered by health officials. This is individuals and families making their own decisions and businesses making their own decisions about how they want to handle the situation. So what you have is a kind of private sector and household response to the crisis, which includes them not wanting to get sick and not wanting to get others that are in their circle sick. So because of that, regardless of what the health officials would say at this point, I think everyone wants to basically stay home until this virus goes away. And so because of that, I think all across the country, you're basically in a partial shutdown situation.
Let me ask you a couple of things about the bill that passed and the Fed's new powers. The language in the bill says you can buy corporate bonds down to the lowest rating for corporates. And those are obviously the ones who are going to need the most help, but they're also the ones most likely to see their ratings downgraded into junk, which in theory you can't own. So how much risk are you willing to take on?
Yeah, well, we've got to think about exactly how to execute on that one. But the main idea of a program like that is to restore basic market functioning, which broke down as this crisis broke out here. So I think we've got backing from the Treasury. That's a 13.3 program, very powerful, and I think we'll be able to keep price discovery going in that sector there.
Muni bonds also getting a nod in the bill. Is that going to be a new program to buy munis, or are you just going to use the existing program that you set up last week?
Well, again, I think intervention in that kind of market is mostly that we want market functioning to occur. So I think investors got so worried about state and local government that they started to pull away from those kinds of investments, which have historically been pretty solid. So hopefully we'll get price discovery going again, and I think the market will actually be fine here. Again, I think there are plenty of resources in the bill to handle our current situation, and that should reassure investors that state and local governments will be made whole here.
The law of unintended consequences has kicked in the mortgage market. The big, massive purchases you've made at MBS are now leading to big margin calls for brokers. Is that something you can do something about, or are there other possible unintended consequences you worry about?
We have heard reports of that, and I think that the MBS purchases can be adjusted so that we get sort of accurate pricing in that market to meet the needs of those that are producing MBS. We'll see how that goes. That's a very minute-by-minute kind of decision on intervention and purchases of MBS. But we have a great team in New York that's working on that, and I think we'll be able to get good outcomes there.
I'm wondering, when you think about where all this leads, what you see ahead. You're going to have trillions in additional national debt. You're going to have billions in loans out to companies at very low rates. Can you raise rates, or are you pretty much stuck forever now?
Stuck forever. I think near term, as we come out of this, interest rates will probably stay very low for quite a while. We are taking on more debt as a nation, but we're taking it on at very low interest rates, so that part should work well for the near term. As we get further out past the crisis, we'll have to evaluate our fiscal strategy and see but that'll be up to Congress what they want to do. It's a big country. We can carry, 10% more debt. It's not ideal, but we can certainly do it. And if there was ever a time where you wanted to do something like this, now is that time.
One last question here. Someone said when you first cut rates and set up lending programs, you were throwing the kitchen sink at things, and then you cut rates again and set up more programs and threw the kitchen sink again. Do you have more than one sink, or do you throw the same sink over and over again? Basically, what's left in the toolbox?
Well, I think the bottom line is that these 13(3) authorities that are in the Federal Reserve Act are very powerful. And because they're set up to allow the Fed to do lending in unusual and exigent circumstances with the consent of the Treasury. And so you can do a lot with that, and I think that's what we're seeing right now, and if we had to do more with that, we could. It's a Board of Governors program. It's not an FOMC program. It's a board, and we do need Treasury authority, but in special situations like this one, and what could be more special than this one, makes a lot of sense to go ahead and use that power and see if we can smooth out this ride as we get to the other side of this virus.
Very quickly, do you think baseball season starts this year? You're a big Cardinals fan.
I am. I haven't seen anything about baseball so far. So I was actually, I don't know about you, but I was, one of the aspects of this crisis is I was very shocked when sports decided to shut down. That really jolted me. So one of many jolts during this crisis, but it was shocking.